The fast-moving global energy shift is on, and it's driving demand for critical minerals like nickel. On today's episode of Shifting Energy, we will examine the nickel market, tell you about ETFs tracking it, and the underlying factors that have turned nickel into a high-demand commodity. Stay with us. I'm Thalia Hayden with ETF Guide. It's great to have you joining us. Welcome to Shifting Energy, an original episode series that keeps you on top of big changes in the global energy transition. Today's focus is nickel. It's a versatile metal that plays a critical role in various industries, from aerospace to battery manufacturing, even physical coins. Nickel has many favorable properties. It's sought after for its corrosion resistance and high melting point capabilities. So what is nickel's present and future role in the global energy transition? And how can you position your investment portfolio to participate? Here to discuss that and so much more is Steve Schoffstall, Director of ETF Product Management at Sprott Asset Management. Steve, welcome back.
Thanks for having me.
Sure. Let's get started here. Nickel's playing an important role in the global energy transition. It's also a versatile metal used in many industries due to its attractive properties like high melting point. So what are some of the common things and places where nickel's being used today?
Yeah, it really has become one of those invaluable parts of our modern society. And given its high resistance to heat and corrosion and its ability to be easily cleaned, it really does fit a lot of parts of modern society that people might not even realize it's a part of their daily life. If you look at the biggest use, the primary use is actually stainless steel. That makes up about 2/3 of all demand for nickel. You see that in your pots and pans, as well as all aspects of industrial and manufacturing processes. You see it being used a lot in tools because it is a strong metal. You see it in car and jet engines because of that high resistance to corrosion and heat. Things like lithium ion batteries are increasingly using more nickel to increase the drivable range. We see it in other parts of energy generation, from nuclear energy to oil and gas, because of those anti-corrosive properties. And we do see it used in coins. I would say one of the areas that we're really starting to see pick up usage would be as it relates to the EV batteries. By adding nickel to lithium ion batteries, we increase the energy density, and that increases the overall drivable range. So for those places like the United States that are very car dependent, this will become an increasingly important part of the transition from gas-powered cars to EVs as we move out the next coming decades.
Very interesting. And how does the size of the nickel market compare to other metals, and what countries are the biggest suppliers?
Yeah, it really is one of the largest mined metals out there. It comes in number 6. If you start to rank it, it comes behind things like iron ore, copper, gold, silver, zinc, and then you'll find nickel kind of slides right in there quite nicely. It does have some similar dynamics to what we see with some of the other transition metals like lithium and copper, is that the production is very concentrated. So if you were to look at lithium, for example, you'd see it's very concentrated in places like Chile. When you start looking at nickel, Indonesia really is the primary location where nickel's being mined. About 50% actually comes out of Indonesia. When we start moving down the list, you'll see the Philippines drops all the way down to about 10% production. We see Russia, New Caledonia, and Australia on that list. And just to give you an idea of how big Indonesia's lead really is, if you were to look at the available resources within countries, Indonesia and Australia have about the same available reserves of nickel. Yet one produces 50%. In Indonesia's case, the other's only producing about 5%. What we also see among some of these 5 countries is that there's some socio-economic risks that really could find their way into the supply chain. So if you were to look at Indonesia, for example, much like they've been doing everywhere, it seems, for the last 2 decades, China's really been getting close to Indonesia as they try to corner various aspects of the critical minerals market. One of the things that Indonesia's done to spur investment is that they're requiring that a country or a company doesn't just come in, mine the material, send it home for processing. They're requiring countries to come in and actually help build up their supply chain. We see China doing that, one, given the amount of reserves that are in Indonesia, and then second, how close it is to China. When you start to look at Russia, that's quite an obvious example of some risk to the supply chain. And actually here in late April, We actually saw the US and UK ban nickel imports, and they're also prohibiting the metals exchanges from accepting Russian nickel. So that's about 7% or so of the nickel that's going to come out of the UK and US market. And then more recently, New Caledonia, which is a small island near Australia. It's a French territory. There's actually been some rioting going on there recently in recent weeks. And part of that is because of the plans of the French government where they announced that they want to mine the nickel, send it back to the EU for processing, and can distribute it within the European Union. So the residents there, as nickel is very much a source of their economic wealth, aren't too happy about this. And we've seen some unrest there as well.
Yes, we have. Now, you touched on this a little bit. Let's talk more about the market trends in nickel. What factors are driving nickel demand and growth the most, do you think?
So we have our everyday uses that we talked about, stainless steel tools, those types of things. But I think once we look forward, the two areas where we really start to see nickel getting a lot more demand would be one from the energy transition and the other is from technological advances. If we look at the energy transition, this is related around that EV growth story. And what we see there is, on a global basis, we saw about a 23% increase in global EV sales last year. That's down from what expectations were, but very strong growth. We would anticipate that as the EV market continues to iterate and get new competitors and move forward as we progress during the energy transition, we would expect to see significant growth from that aspect. Another more recent story, which is really emerging, is as it relates to technology, and in particular data centers and AI. So AI requires these vast data centers that use a lot of computational power, lots of energy to power these large data centers. One of the things that they need on periods when they might not have access to energy, if they're using solar or there's other infrastructure problems, is they need to have battery backups. And what we're seeing a lot of companies are starting to look at is, instead of looking at certain battery chemistries, they're now starting to look at the nickel zinc battery chemistry. And what that does is it provides a much more dense battery, which means it takes up less space, which is at a premium inside these data centers, but also can operate at a much higher temperature. So because of this, these data centers can significantly reduce their cooling costs. So I think those are two aspects where we can really see nickel getting increased demand as we move forward. And I would just say on the supply and demand aspect, as we look at a whole, we're currently a little bit oversupplied in the nickel market. We've seen the miners pull back their production somewhat here in recent months. We would expect that oversupply to sit here for the next few years. But as we move through the rest of this decade, we would expect to see a decline as we get closer to 2030 in overall supply of nickel. At the same time as we see this decline, which appears to be steady through 2050, according to projections, these increases in EV and data and AI centers, we expect that to increase the demand to, at which point we'll flip to actually a supply deficit for the foreseeable future.
Wow. Okay. Got it. Now, switching gears a little bit, the Sprott Nickel Miners ETF is an easy way for financial advisors and investors to get exposure to nickel. How does the fund work and what does it hold?
It's a great way to get exposure because you can trade it just like a stock or any other ETF. The ticker is NIKL, or nickel as we refer to it internally here. It tracks the NASDAQ Sprott Nickel Miners Index, which is an index that we co-created with NASDAQ. And as part of this process, what we wanted to do was provide the only ETF actually that provides focused exposure to nickel. So while you may have other ETFs that do have some nickel exposure, the whole purpose of this ETF is to provide exposure to those nickel producers, the miners, and the exploration development type companies. The strategy is pretty simple and straightforward. So twice a year we go through a analysis process where we rebalance the index, and our whole goal is to provide a pure play investment strategy. And what that looks like to us is, our goal is to have of the constituents that are in the index, they would have at least 50% of their revenue or assets tied to mining nickel or the exploration of nickel. In the case of the nickel market, it's relatively small. The fund holds about 22 names. So with that, we do have to broaden our 50% or more criteria. We do have 3 names that fall into 25 to 50% of their assets dedicated to nickel. So we do bring that down a little bit, although we do cap the exposure there. Another thing that we do as it relates to construction of the index, we don't have any China A shares, which means that we don't invest in mainland China. And this is an international fund. There's no real direct exposure to the United States. When you start looking at the exposure and start looking at the top 80% of the fund is actually allocated to Australia, Indonesia, and Canada. And given the size of the nickel components, we see about 60% of the fund is mid cap, and the remaining 40% is going to be that small or micro cap.
All right, Steve, one last question before we let you go here. How do you see investors and advisors deploying NIKL inside a diversified portfolio?
So we see three main uses. So one is kind of the obvious one. That's a commodity bucket, right? So a lot of commodity indexes tend to be underweight nickel or excluded altogether. So we see people add this to their commodity portfolio, or maybe they want to allocate more to nickel than what the benchmark they're tracking may be providing. Second, and probably I would say most common would be that thematic or growth bucket. So thematics and growth tend to go hand in hand. So as this is an area of the commodity sector that we expect to see significant growth as we move through the coming decades, we're seeing advisors and retail investors allocate there as well. And then finally, given its use in EV batteries and the storage of energy, we do see people allocating to energy, which, given that these are all international names, if you had a primarily U.S.-centric energy fund that you were focused in, you wouldn't have any real exposure to nickel. So this is a great add-on to that side of your portfolio as well.
All right. You gave us some great information to work with here. We do unfortunately need to leave things there, but thank you, Steve, for your insights into the nickel market. Keep up the great work.
Thank you.
And that does it for today's episode of Shifting Energy. If you enjoyed the show, tell us in the comments section below by hitting that like button. If you missed previous episodes of Shifting Energy, just hit the Shifting Energy playlist to catch up. To learn more about the investment strategies and ETFs we discussed on today's program, be sure to visit SprottETFs.com. I'm Thalia Hayden with ETF Guide. Thanks for watching, and we'll see you next time.